Yeah.
All right,
Let me know when.
we're live.
Good morning, everybody. Friday, June 21st, kind of the official formal rollover day. The volume in the June futures contracts has finally been taken over by the next rollover date, September futures. So everybody should be on the September contract. And the rollover will officially have happened by Monday. The June futures contract will effectively equalize to the let's say if it's the S&P 500 futures or if it's the Nasdaq futures, it will have expired to what's called the spot, which is the current cash index. So that would be exactly where the SPX and NDX are trading. So those will finally match up. It's always interesting to realize that the way those spreads start off, back when we started off and we ruled from the March to the June futures contract, the spread was trading around 67, and now that 67 is closely approached zero. So anyway, it's just, there you go. It's a function of how the futures work. Excuse me again for the hacky cough here. So three pretty key questions that you always want to ask yourself when you're prepping for the day. Where is the market now? So where did we trade overnight? Any data? What did we do yesterday? And finish off with expectations for the day based on your assessment of the first two items. So when we go to the two charts you have in front of you are the S&P 500 futures and the actual Nasdaq. That's the cash NQ. Okay, let's go to this. So we can see where the trend had been. Let's see. I want to make sure this is showing. Can you guys see this okay?
Yeah.
There we go. There we go. So we can see where the trend has been. We kind of broke out of this area here from the 54.28 area, and we moved gapped upward. And essentially, this what we were following. We were following the Nasdaq, the tech leaders. So we've been the S&P 500 has been chasing the Nasdaq. That's not a good place to be. The relationship becomes maligned, and it's very difficult to trade any S&P 500 futures. So yesterday, got this right here. So yesterday we opened up right around the 55.60 area. Well, let's see here. Let me get this right. Yeah, we opened up right around the 55.64 area, traded as high as the 55.84 area. That ended up being resistance. The spread between the September contract and the SPX is right around 70. So this reflected the high. You'll recall that when we were on the phone, on the call, we were discussing the importance of 5,500, kind of a gamma psychological level. And we expected that to be resistance from the opening. We did trade up to about 55.04.05 area, and then we came off that area. And finally, some of the tech stocks, they started some profits started coming out of that, and they started selling off a little bit, late morning, and that pulled off. And we can see that this is reflected. This is the Nasdaq chart. So right here is the high. This is the 2373 area, and we now come off almost 300 points back down into this area. So we've it was a nice sell-off, and I always, as you guys know, I always look for the correlations to be able to trade the S&P 500 futures off the Nasdaq. But in this case, I kept seeing it was just such a decoupling. I couldn't correlate I couldn't correlate off of the NASDAQ for the S&P 500 futures trade. So here's what I did. So here we have the NASDAQ futures right here. And we have on the right chart, we have the NDX. And I pointed out in the room numerous times. You guys see this purple triangle here? That was a key support area right around 19,840 and the NDX. That was key. So I actually went and did an old school trade where based on the underlying contract, that gave me a very concrete tell. I mean, this is a serious, imagine, this was just a serious line in the sand. Once I saw this trade down to that 19,822, I knew that we were coming off. Actually, then I shorted the NASDAQ futures right around 2,100. And I was able to pick up a very fast 70 points out of that thing. I did not note it in the room because that's not a normal correlation trade I will pursue. But I had a number of contracts on, not crazy size, probably less than quarter size, but it ended up being a nice little trade. But it's evidence, and I've tried to point out, it's evidence that sometimes it's really hard to really get more definable levels in the futures markets when you're only looking at a futures chart. Always best to go to the underlying chart, the SPX or the NDX. You're going to get much clearer levels. And then you find out what is the spread between the underlying and the futures, and you make your adjustments at the opening. And now you can refine your futures levels off of that. So this was a great example of a trade that I pursued, that it was just so much clearer here. Now, while one can contend that this is a very definable area here, the 2125, and I would agree. I'm seeing that as well. That correlates to the 19,840 and the NDX contract. I would agree with that, but that is normally not the case. I just have so much confidence in initiating a trade off of the underlying. So that was like a good trade, and it gave me a strong sense of what we were trying to do. And the levels below were right around this 19,690, 700. That was an area of support. You could see this. And then the next level below is this. And in this area here. So this will be key support here, 19,640 in the NASDAQ. So right now what I'm seeing with the NASDAQ futures, it's only down 13. So that would imply that the NASDAQ, if that was to open, the NDX, it closed at 19,752. I mean, go on and subtract out your 13. It's barely down. So it's opening. If the market was to open, it's going to open in this range. So I would contend that the 19,690s, 19,700 could serve as some support. If we break that level, we'll come down a little bit further, another probably 50, 60 points. And this area should establish some, a lot better support. Once again, I apologize for the doggone cough. Let's go over to the SPX. Let's do some sort of comparison here. I'm gonna highlight this. Highlight this. So you can see where the support area below where the SPX was trading yesterday, we finally broke below that 54.86 area, and we came down in this area. But can you just see how this is like? This is in a low volume area, but it's really it's really in no man's land. It really is just in no man's land. It's like there's no defining areas for any sort of support or anything until you get down to the 54.46 area. This area here, 54.40, 54.50, that'll serve as some support. Based on how the NASDAQ was trading yesterday, we really kind of thought that we'd probably sell off and get down this area. but we didn't. So this was just a very hard trade. Thus, the trade was more on the NASDAQ. So right now, the SP 500 futures is down 5 points, 55.39. So if the SPX closed at 54.73, the SPX would be opening up around 54.68. So that actually is in this little area here. So it'll open up right in here if we were to open up right now. So how does one perceive a possible trade based on that? The S&P is opening up at that area. I find it very difficult to conceive of the trade when it opens up there. I think there are two possibilities based on that. Either we trade down to this 54.45, 54.50 area. That'll serve as support where I'll be looking for a long. Or we trade back above here and we come back to, again, this is SPX, not the SP 500 future. Or we get back up to this area here, 54.88, 87. I'll be looking, I would expect this is going to serve as some sort of resistance here, and I'll be looking for a short here. You're basically looking at 2-3 points of risk. If you think where the trade is wrong, it exceeds that, just reduce your sides to adjust. Because if we trade back above this area, there's a good chance we'll trade back to 55.04, 05 area. There's a good chance. So the underpinnings for today's trade, even though we've now gone over this, it's OPEX and a big rebalancing. The techs have had a massive run. There's potential for some sort of unwind with various, the fuel that is going to be generated from the options expiring. So we could see some big movements today. So if one is uncomfortable with that, sit on the sidelines, and we'll be trying to identify some stocks that are potential candidates for the unwind. One was Dan and I were watching Adobe yesterday. So we think that's a potential for an unwind to the downside. So this could be really interesting. I'm going to be primarily paying attention to the NASDAQ. And that's going to be my guiding tool for the day, as it always is. Especially since the techs have been the one that have had the massive run. So SPYs, the SPOOs, those are going to be a little bit more of a difficult trade today until we kind of stretch and get to these kind of resistance or support level. Don't even consider getting involved in the middle. The monkey in the middle is a big loser. With that, I will quickly hand it over to I don't know if Dan, I think Dan was going to be on the road, so I don't know if he's on the call. I'll hand it over.
I'm here.
Okay.
I'm here. I don't
All
have
right.
the ability to share
All
my
right.
screen, but
Yeah, you turn your volume up.
hold on. Let me see.
Yep, that's good.
Is that better?
Yep.
It is.
So, I wanted to bring up sort of the OPEX dynamics today. So, we have $5.1 trillion of sort of notional options expiring today. A lot of that is in the SPX, and which is a morning expiration. So at 9:30 and 1 second, those have expired. So that can serve as a catalyst for sort of some unpinning of sort of volatility. And that's sort of what I'm thinking is a possibility today, is that we could see the VIX sort of unpin from this 12-13 area because of all that notional sort of unwind. So some of the things that I'm going to be looking for is maybe not necessarily in the S&P 500, because there's actually some unwinding of positioning that can happen, sort of downside positioning in some names. You know, we saw yesterday CRM was one because it had that big move down. You know, some of the beaten down industrials and other sectors besides tech could actually get a bid because they've gotten pretty beat, and that could throw in sort of some bifurcation into the S&P 500. So I think early in the day we'll have a really good idea, maybe by 10:30, if the VIX, you start seeing the VIX start really moving to the upside. We could see a real unpinning of volatility because of just the pure dollar amount of expirations at 9:30 in 1 second, or you know, and the amount of upside tech. I mean, Nvidia yesterday we saw go up to 140. So essentially, from the split, think about it from the split, 1400, and closed and essentially pre-split made $100-ish move back down and closed around 130. So, you know, that's a massive move and massive swing, where if that actually, I think, could be one that sort of unpins to the downside and retraces because of the amount of upside volume in it. So how do you sort of construct a trade on it is a different thing, where ARM was one I was speaking to Lee about yesterday morning, you know, that had made such a crazy move and broke those highs, and then it came back down to the previous all-time high and just smoked that, and now is under 160 again. So you've got sort of a lot of those moves were front run yesterday. Let's see if there's some continuation, and my thought would be that maybe the best way to monetize this would be later in the day as a buyable dip, instead of a early in the day chasing downside. Maybe that might be the most sensible way to monetize it. That's sort of what I'm going to be looking for. I'll be back at the screens around maybe 10:30-ish, and but that first hour is going to be pretty wild, and futures are going to be pretty swingy, and I would envision that there's going to be some very, very fast movements on the index. And today, my guess is that sort of tech has a pretty decent little unwind. But I believe it will be buyable sort of at the end of the day into next week, and on some names if we get a larger sell-off. So I think that we've got to be careful and protect money. But I think there might be some downside plays immediately at the open if we get any sort of place to enter. And I think late in the day, 1-2 o'clock, there may be an opportunity for some longs and maybe some longs into next week. So we will have to see and play it by ear. But I'll turn it over, and that's all from me.
Good morning. You should be able to select my screen. Let me know you can see it.
Got it.
All right. So I'll just go over a couple things from yesterday and what I'm looking at today. Just as you remember, I had these two major Fibonacci levels yesterday that we were looking at, and once we lost this 5564 Fibonacci was sort of the area. Initially, I took a long off of it yesterday, which if we zoom in, you know, right around here yesterday, right at open, we came down and I got this move here. And then we kind of played around yesterday, and then once we lost it, we lost sort of this support zone, we came down. So definitely watching that level today for multiple reasons. we do sort of have a pattern here for a pushback up this morning. So a couple things that I'm looking at, I'll draw my Fibonacci's just for intraday purposes from this high of yesterday to the low. And you see this, we get another 61.8 right here at 55.64. What's the significance of that? Well, that's the same area that this Fibonacci over here, this 161.8. It's also the VPOC from yesterday. And, so there's basically a lot of confluence in this area. So if we get an upside move, this 62, 64 area is going to be big. And probably one that I would definitely be looking to short if we come up into this area. It is 20 points higher, so we got a long way to get there, but just one area I wanted to point out. Also,
I concur with that. That was the short area that I identified. I concur.
And yesterday I also drew these, this pivotal low to that high yesterday. And below us here and where we stopped yesterday, and again overnight, is a 50 Fibonacci of this move, this retracement here. So again, along off of these areas would be a good, low risk reward type setup. If we do break below and we come down into this area we've identified here as a prior resistance, hopefully, if that becomes a support, and there's a 61.8 right above it too. So this would be, a couple of areas I would identify for a long.
Can you state what that number is?
Yep. So right now, the immediate one where we came down to yesterday and overnight is the 55.25.50.
Yep.
55.26 area. Yep. Would be the first long I would be looking at. If we dip below that, I'll be looking to catch something in the 09.10.50 area.
Oh, really? Oh, yep. Wow.
Yeah.
Because I was showing kind of the 55, 16, 17, and the next level was the 09.10. What is that? What is your 09 and 10? What is that based on?
This is a 61.8 retracement from this pivotal low from last Friday up to this high on Thursday morning. So I measured this to this, and then yesterday that acted as our support, which is the 50 Fibonacci.
Okay.
If we dip below that, the next logical area to go to would be the 61.8 at 10.50.
Okay.
We do have this wick over here at 18.
Right, that was the area that I was kind of looking at, yeah.
But I don't really have anything else there. I think that was actually a pivot level, which is where that rejection came in there. I'll have to look back at my notes. Maybe it was on the pivot side. I don't have a ton of resistance until we get above this area we talked about. I have a 68 weekly pivot there, so nothing huge. Intraday, let me zoom into a 15, a little easier. We do have something at 52.75. This is a daily mid pivot, so that kind of acts as a over under bullish bearish type setup, and then some support, some resistances here. 79.75 resistance and a 17.25 support. But I'm more leaning towards the levels mentioned prior. I'd be looking for something here, down here at the 61.8, and then a short up here at the 63.64 area. And that's kind of my lean today is pretty neutral. Could go either way. Oops, let me zoom here. Like Dan said, it's this big option expiration happening here this morning. And we'll just kind of see how that's going to reflect in the price action?
It's actually nearly half of the notional value expiring is this morning's SPX.
Right.
So that can really throw a wrench in the morning, and what could happen is whatever sort of move is that first candle, you're probably not going to want to try and reverse that candle, because it will probably just keep going further than you think, either up or down.
Yeah. And if there was ever a day where technicals are negated, it could be today.
It will be today, yes.
Because mechanics, that are, oversized mechanical type moves tend to ignore levels. So I'm definitely, if I am playing, I'm playing half size. Algorithms are still there. They're still going to respect these. But, if we came down here where you would get a, 10 or a 5 to 10 point reflexive bounce off of these levels, maybe you get a couple points. So we'll just kind of see how things play out. Individual stocks, obviously always watching Tesla. I was actually saying this could be ripe for a move back up. We got a little pop here just now. I do like how this, previously this had gone up and come back down into the 170s, got up into the 180s, come back down into the 170s. And we kind of held this 180 area now, so let's see if we can get back up, into these upper 180, low 190 area, and finally try and get this 200 test that we've been trying to get for weeks. CRM is one I took yesterday, still have some left, but this is definitely set up for a move higher, potentially. AMD, another one, had that big move yesterday, came back, it's supported at this 161 area, which is what we wanted to see for continuation higher. I'm in small position there now because, and everything really because of today, we can always re-enter stuff. So kind of see how things shake out today. Just I would definitely size down. You don't have to trade. That's the key. There's never a trade that you have to take. Just kind of wait and see how things pan out. Wait for the setups, and even the setups today, just be a little more cautious and see how things play out.
Yeah, watch this candle right now. I mean, this
Yep.
could get a little hairy.
I'll stay streamy here because we're about to open.
Yeah, because I'm on the road, and so I didn't say anything. I shorted 43. I'm half out at 38, but probably I'm looking for. Yep, I just filled my close at 31. So. If we blow this 30 area, we can get real nasty.